Welcome to Satya Talks. This is CHVV Satyanarayana. For over a century, the Times of India has been more than just a newspaper. It has been an institution that shaped public discourse, journalism, and media economics in India. However, recent reports from early 2026 suggest that media landscape is forcing even legacy institutions to reassess their long-term strategies. According to multiple media reports, there are early stage internal discussions within the Times Group regarding the future of its traditional print-led business, especially in the context of rapid technological shifts such as AI-driven content creation, and digital consumption. While no formal announcement has been made and the discussions remain speculative, questions are being raised about whether these signals strategic restructuring, a digital first reset, or even a possible ownership transition in the future. To help us understanding what this could mean for Indian media, journalism, and business models, we are joined by senior economic and media analyst Dr. Vivian Sastry. Dr. Sastry, let me begin by asking what should we read into these reports surrounding the future of the Times Group? There is a lot of speculation around the Times of India and its parent company, Bennett Coleman and Company Limited. At this stage, should this be seen as a possible ownership change or simply a strategic reassessment?
Good question, sir. At this stage, I feel it would be far more accurate to view this as a strategic reassessment rather than an ownership change. Because globally, legacy media groups periodically reassess their structure when technology, consumer behavior, and revenue models shift very sharply. A reassessment does not automatically mean a sale. Very often, it is about deciding where to invest, what to scale down, and how to future proof the business. In India, also, the Times of India has historically shown a strong ability to adapt, whether through supplements, digital platforms, or diversified media ventures, whatever it may be, whatever the changes that came, that toy has adopted periodically. Strategic introspection by promoters should be seen as prudent governance, not as distress at this point of time. That's what is my personal feeling. But here, I would like to quote two examples, one from the Indian side and the other from the American side. The first one is about the Hindu group. When Hindu group undertook a major internal restructuring few years ago, that tightened editorial focus and rationalized costs and strengthened the digital framework of the entire Hindu group without any kind of ownership change. That restructuring has improved long-term sustainability of the Hindu group as a whole in the country. Not only that, if we see an overseas example from the American side, the New York Times Company went through multiple strategic reassessments between 2012 and 2017, including selling non-core assets and providing to digital subscriptions. These moves strengthened the company without any ownership dilution. In that context, I see this Times of India's this grapevine that is going around, and I feel that mostly it is going to be a kind of strategic restructuring at the most. Sir,
Globally, traditional print media is under pressure due to digital platforms and AI driven news delivery. Is this Times Group facing the same structural challenges that global legacy media houses are dealing with?
good question again, sir. Yes, the Times Group is definitely facing the same structural headwinds as global legacy media has been facing, but with an important distinction that we need to make. India's print decline is slower and more regionalized compared to Western markets. Advertising has moved decisively to digital platforms from the print platforms. Reader attention is fragmented at this point of time, and younger audiences consume news through mobile, video, and social feeds. These pressures are definitely universal, including India. However, India still has strong vernacular and urban print readerships, which gives India and Indian publishers a longer transition runaway than their Western counterparts. Again, here I would like to give an Indian example. Most major Indian newspapers, Times, Indian Express, and Hindustan Times, still maintain print circulation. That is their strength. But digital advertising is now growing faster than print and revenues. Given that scenario, maybe they also need to focus more on the digitization front. Again, if I give an overseas example there, in the US and Europe, newspapers like The Guardian and The Washington Post saw sharp print revenue collapses and they had to pivot aggressively to digital memberships and donor models much earlier. This is how the world is transforming as far as digital platforms and their transition is concerned, sir. And in that context, toy is no exception. Toy also has to move faster towards digitization of its legacy media, and that way it can sustain. And that's where maybe this whole restructuring exercise that the group is currently focusing on may work towards. That's what is my personal feeling, sir.
One of the reported factors is the impact of artificial intelligence and news production and distribution. How disruptive is artificial intelligence to the traditional print-led business models?
Again, a good question, sir. AI is not eliminating journalism, but it is fundamentally going to reshape how news is going to be produced, distributed, and monetized. AI, according to me, automates routine reporting, content tagging, headline optimization, translation, and distribution, but it cannot replace investigative reporting, editorial judgment, or credibility. If I have to give an example, I can give you as an example here. In fact, in 2007-8, if I can recollect well, you have organized in Andhra Pradesh an all Andhra investors awareness program that got tremendous response, and you got an award for that also. Such kind of innovative thinking and such kind of innovative way of organizing the programs with credible questions cannot be replaced by AI. So definitely the human mode is definitely going to be there, and that's where I feel for print-led organizations, though AI disrupts cost structures and speed expectations, forcing forcing a forcing a rethink of news workroom flows. But again, if we take an example, several Indian media houses now use AI for election data processing, market updates, and multilingual translation, improving efficiency without cutting core editorial staff. And again, if we take overseas example, the Associated Press has used AI for years to generate earnings reports and sports summaries, freeing journalists to focus on deeper stories rather than replacing them. All said and done, Satyanan Garu, investigative journalism cannot be replaced by AI. So AI may act as a supplement to investigative journalism, apart from the low-end repeat kind of works that journalists are doing that may find, I think, replacement through AI. So that's where creativity, investigative journalism will survive, sir, going forward.
Okay, fine. Reports suggest that senior leadership within the TOI promoter family may be reassessing long-term sustainability. In such a reassessment, a natural and responsible step for a legacy media group at this time. At this point in time, you may have
Yeah.
seen some tweet with from King Shuknag, who worked as a resident editor in Hyderabad also. Uh,
Yes.
Reply.
Yes, sir. Yeah, absolutely. In fact, not reassessing would be irresponsible at this point of time for any media house. legacy media groups carry long term institutional responsibility, not just to shareholders, but to readers, employees, and democratic discourse. Reassessment is about asking hard questions. What is our core strength? What should we exit? Where should capital and talent be redeployed? These are the questions that the leading media and legacy media houses need to ask for themselves. There again, if I want to quote some Indian examples, the Tata Group regularly reassesses legacy businesses. It closes or restructures units when models become outdated while preserving the institutional values. Again, if we take overseas example, the BBC, British Broadcasting Corporation, undertook a major sustainability review, cutting certain traditional formal formats while investing heavily in the digital podcasts and streaming platforms. So likewise, with reference to toy also, definitely they need to do a reassessment and they need to refocus themselves according to the current trends. That's what is my take on your question, sir.
There has also been market speculation about whether large conglomerates could be interested, though nothing is confirmed. Is it
Ye-
common globally for major business groups to look at media assets during periods of industry transition?
Yeah. The answer is yes, sir. It's quite common. Media assets are often evaluated during transition phases because they carry strategic influence, brand equity, and audience trust, even if short term profitability is under pressure. However, interest does not automatically translate into acquisition. Many discussions never progress beyond exploratory stages. So, again, some examples if we take, several Indian conglomerates have entered media over the years, often through minority stakes or platform partnerships rather than outright takeovers. Again, Jeff Bezos from the overseas side acquired the Washington Post. It's a classic case where a strategic buyer invested not for immediate returns but for long term relevance and institutional value. So, continuous evaluation of opportunities on the Indian side tends to happen, but quick deal happening may not be the case at any given point of time unless the valuation suits the suitor, sir.
If not a full scale, would alternative options such as strategic partnerships or minority stake investments be a more likely path forward?
Yes, sir. This is actually increasingly the preferred global model across. Minority investments allow legacy media groups to access capital, technology, and expertise without losing control because legacy groups always focused on control. So, and also legacy groups focused on editorial independence. So, so long as they have this editorial independence and control, they didn't mind losing small stake, giving small stake to strategic investors. For example, in terms of strategic partnerships, there are often more flexible and less disruptive than outright sales. Indian media groups, for example, HT Media, if you look at what they did is they explored and executed minority stake discussions in HindustanTimes.com and Mint Digital because digital needed tech video data subscription scale. Print remained cash generating and untouched. Likewise, Jagaran Prakash also in Jagaran.com, they have actually given a small stake. And in Indian Express Group, if we see, there again, strategic minority investment was given in IndianExpress.com and their digital video also. Now, when it comes to Times Group, they also have small minority investments at Times Internet. But the key point is Times of India never diluted either in their print arms or in their digital arms. They have many like Ghana, MX Takatak, DOI Digital, Cricket Buzz, like they have many, but they prefer to run them independently on their own. So they generally feel that that digital valuation is almost equivalent to print valuation, though in reality it may not be so. But again, in strategic partnerships, if you see, Network 18 has done a small strategic investment, Malayalam Manorama has done. Likewise, there are many examples to quote. When we come to even overseas examples, the leading financial daily, that is the Financial Times from London, has repeatedly partnered with technology and data firms and diluted stakes in their company. So I think when we see the leading papers like Financial Times diluting their stakes to have the latest technology onto their side, why not the Indian companies? I think they just need to come out of the traditional thinking of control and editorial control. Control in terms of equity, stakes, and control in terms of editorial freedom. If both they democratize, then definitely they also get great collaborative partners. They may also tend to change according to the changing needs of the hour, sir.
There is also a rumor that Adani may take over TOI. What's your response?
Uh, in India, at this point of time, any kind of takeover that is big in scale, definitely it indicates the name of Adani only, because at this point of time, anybody who has that kind of the capital or the appetite to acquire such kind of big ventures, or the ability to raise such kind of capital to acquire big valuation ventures is only with Adani, and he tends to be a kind of daredevil. So the speculation that Adani may acquire this may be right, but whether the intent to sell it is there with TOA or not is a speculative talk, sir.
Okay. The Times Group has in past explored unlocking value through its digital arm separately. In the separation of print and digital business becoming a standard trend in the media industry.
Yeah, correct. Yeah. Structurally, starting print and digital is becoming common because they operate on completely different economics, talent needs, and growth curves. Print is cash generative but very matured. Digital is capital hungry but scalable. Again, several Indian media groups now run digital as a separate vertical with independent leadership, budgets, and growth targets. Again, if we take overseas example, the New York Times internally treats its digital subscription business almost as a standalone growth engine when compared to its print version and print operations. So this is how currently there is a distinction. If we see the overseas models, they are giving more emphasis and focus to digitized versions. When it comes to India, it is still under transition. People are experimenting, trying, but capital wise, they are not infusing the required capital, but within the available scanty capital, they are trying to get maximum revenues, but that's not becoming possible. That's where the ventures are remaining half cooked. So that's where majority of the digital ventures in India are failing. But given the constant capital infusion, definitely these Indian digital ventures will also succeed, and they may also prove their mettle, sir.
Okay. Whenever ownership or investment discussions arise in media, concerns about editorial independence follow. How legitimate are these concerns and how are they typically addressed in mature media markets?
Concerns are legitimate, sir, but they are not insurmountable. Mature media markets rely on governance mechanism, independent editorial boards, clear ownership, editorial separation, and public transparency. Ownership alone does not determine editorial freedom. Institutional culture and safeguards also do participate in terms of editorial separation. Several Indian publications, if we take, have retained strong editorial identities despite ownership changes due to robust editorial charters they have. But if we take again the overseas examples, the Financial Times, owned by Nikkei, Nikkei, financial index that we say, it was owned by Nikkei, but it continues to operate with globally respected, editorially independent, strict governance structures. So Nikkei owning Financial Times as a world's leading financial newspaper, having various editors participating from various parts of the world with their editorial independence, still safeguarding all the editorial norms with the given governance structures. When it could be possible with the Financial Times, why it can't be with TOI or Hindustan Times or Inadu or Sakshi or whatever it may be? So, with all the papers, actually, this editorial needs to be made independent, professionally run, rather than a controlled one. If it is a controlled one, the editorials will be biased, sir. That's the reason we need to have independent editorial boards, and also the ownership should be separate and the editorial boards should be separate. That's where the newspapers tends to give the real news to the people, sir. Otherwise, it will be like a bandwagon of some XYZ. So it remains like that only. So that will be banded that way, and those papers and those media houses will also get branded in that way, and they remain there only, and they may not find good valuations as such. So definitely, though there may be editorial concerns with the legacy houses, but they are not as proven as they are thought to be, sir.
Okay. Should the discussions be viewed as an isolated case related to the Times Group, or do they indicate a broader transformation underway across the Indian media industry?
I feel, sir, this is across the media industry, sir, not just what you call specific to TOI. Because the sector wise transformation, if you see, it's just not in isolation. It's not an isolated case at all. Indian media is moving from volume driven advertising models to credibility driven audience centric models. That is where this transition affects print, television, and digital media also alike. Here again, we see consolidation in media. The consolidation may lead to layoffs, digital investments, and format changes across multiple Indian media houses. That's why in media, there is no stability for the people at this point of time. And again, if you see overseas wise, globally, media industries have already gone through similar consolidation already, and reinvention cycles already happened over the past 1 decade, and their models are at least now stabilized, that we can say. So that way, this transformation is underway not only in India but also in abroad, not just with specific reference to one media group, but with reference to all media groups, sir.
Okay. Looking ahead, what does a sustainable media model look like, especially one that balances print legacy, digital growth, and AI driven efficiencies?
Question, sir. A sustainable media model rests on three pillars. They are: one, trust and credibility as the core asset, digital subscriptions, premium content, and diversified revenues as the second pillar, and responsible use of AI to improve efficiency without diluting journalistic standards as the third pillar. If these three pillars are going to be laid very strongly, I feel a sustainable media is going to thrive in India. Print may shrink, sir, absolutely going forward, but it may not vanish that quickly. It will coexist with digital as a premium, influence driven product, but Indian media still benefits from loyal print readership, sir, while building digital scale going forward. Whereas on the overseas side, the New York Times now earns the majority of its revenues from digital subscriptions than from the print subscriptions. So, proving that digital sustainability is achievable is what the US based leading newspapers have already done. Maybe India follows the suit over a period of time, and it's a matter of time. So I feel that going forward, the three pillars that I have mentioned are very crucial for sustainability of media, sir.
Finally, Shastri Garu, tell one thing. For
Yeah.
readers and viewers who have grown up with the Times of India, how should
Yeah.
they interpret these reports? Is this a cause
Uh,
for concern or simply part of natural evolution in the media house?
Great question, sir. As a conclusion, basically, readers should see this not as a crisis, but as an evolution. Media institutions that survive for decades do so precisely because they adapt while holding on to core values. Change in structure does not mean loss of soul. In fact, thoughtful change is often what protects credibility in the long run. So any kind of change that we need to invite and welcome, and we should feel that the changes are definitely going to protect the credibility of the legacy media houses. And with the evolution that is happening in media, slowly we also need to convert towards the, I mean to say, digitization modes, and we need to adapt ourselves with the changes that are happening across the world. Otherwise, we'll be lost in the what you call the wave that's happening across the globe. Thank you, sir.
Okay, thank you, sir. Namaste.
Thank you. Namaste.